Good afternoon, everyone. Welcome along to the final session for the first day of Diggers and Dealers. My name's Aaron Constantine, Director of Canaccord. This afternoon, our first speaker will be Ken Brinson, the Managing Director of Pilbara Minerals. Ken's been here before, he knows the way it works. Ken is a mining engineer with over 25 years' experience in surface and underground mining operations, including roles in mine management, production, and brownfields and greenfields development roles across a range of commodities. Ken joined Pilbara Minerals as CEO in January 2016, was appointed Managing Director and CEO in May 2016. Ken has led the development of the project, which has progressed over from a first drill hole to concentrate exports in under 4 years. This exponential growth has resulted in Pilbara Minerals now being one of the world's leading lithium raw material suppliers, with a portfolio of growth options to execute as the demand for battery raw materials increases. Thanks, Ken.
Thank you, Aaron. It looks like the COVID situation and a lithium story has brought everyone's best social distancing to the fore, but we'll do our best to make sure that you were first to hear it. It's all changing, and thanks very much for joining, ladies and gentlemen. Thanks to everyone that's participating online as well in this new age of Diggers and Dealers. It really is a pleasure to be with you, and for those that are uninitiated to the Pilbara Minerals story, we've developed, commissioned, now fully ramped up our Pilgangora project in the North Pilbara, about 100 kilometres due south of Port Hedland. In one of the world's great mining provinces. We are incredibly lucky to be operating there. It's a really, really big lithium raw materials mine with current installed capacity easily 40 years plus worth of mine life. We sell both a premium, as known in the industry, an SC6 lithium raw material concentrate in the form of spodumene, and we also produce a byproduct credit in tantalite, which is a handy additional revenue source. As I said, it's all happening now, it's all been commissioned, and the team has done a fantastic job to get us to this point in time. And we've brought some amazing partners along the way, some of which I'll speak to in a little bit more detail later on. It really has been an incredible, in my case, an incredible 5 years, but especially the last 18 months, because we had this amazing tailwind in the lithium world that unfortunately all of a sudden came to a stop, primarily influenced by China itself. I'll come back to the market dynamics that drive that aim and that outcome, and also, for that matter, the changes that are now unfolding. But in a funny kind of way, really, for Pilbara Minerals, it's been a genuine case of being forged in the fire. We've worked really, really hard, and I'm very, very proud of the team and what they've been able to achieve with some pretty significant hurdles in front of us. Combination of cyclones, material changes in the dynamics in the industry, having to raise the right amount of money to be able to see the project come to fruition. And last but not least, a homicide. I can assure you that was not something I expected to experience in my mining career. So we've seen the lot. But here we are today, having built really the next largest lithium raw materials facility beyond Greenbushes that was done 25 years ago. We've got that to design recovery, which I can assure you is no mean feat. We've got to the point now that when the plant's operating, we are really, really confident in its reliability and what it's going to deliver, and that translates to a very low cost base. Coming out of the September quarter, we're delivering spodumene concentrate on a dry basis, CFR China, fully costed, royalties, logistics, overheads, for $355 a tonne. And that's second only, I can assure you, to Greenbushes. It's a pretty amazing outcome. Now, having said that, it's been a tough time in the market, especially in the last 15 months. And as a result, we've had to pull back and actually not utilise the full production capacity. At different points in time during FY20, we were operating at about 30% capacity. So that's no sort of not so serious issue for us to deal with. And the team's done an amazing job getting us to the point where we've come out of the back of that with a fantastic plant that is reliable, delivers what we expect it to deliver. We've got an amazing low cost base and a solid balance sheet, having refinanced just in the last couple of months. So out of all that, we are absolutely the horse to back in the lithium raw materials sphere, because we have an amazing asset base, very low cost of production, and an expectation that the demand conditions have already started to improve. So what you're seeing here is the outcome that relates to production, and especially during FY20, a tough period where we had to pull back from the market. A difficult decision, but nonetheless one that was required, fundamentally to make sure that we didn't burn too much cash in operations while we're continuing to improve the plant. But in the periods of time that the plant wasn't operating, the team was using that time very, very wisely, to the point where now we have an outstanding facility that delivers the designed result. The good news is that we also see production steadily improving. We're not quite popping the champagne corks, but there's been a material change in the customer base, and they are stepping up to the mark, and they're back with a buying mode, albeit with a backdrop of weak pricing. So, with that in mind, we're finally poised for that period of time where both the demand and, for that matter, the price continues to improve. You start to get some of that insight when you look at what's happened in production between the June quarter and the September quarter. We basically produced, or we sold, 50% more than we did in the June quarter, but we're also setting up with higher production to deal with the demand that we saw coming in the early part of the December quarter. So I think the trend is good. The trend is generally good in the lithium world. And as I said earlier, an amazing cost outcome, second only to the Greenbushes mine, which is universally recognised as being the gold standard. So we're a long way down the path, and as I said, the right people to be backing in the lithium raw materials world. And further evidence that points to that is the ultra-competitive financing that we delivered in the last couple of months. When we built the mine, we were a greenfields wannabe, and as a result, we had some pretty sharp money behind us, 12% interest rates via the original Nordic bond. We've just been through an extensive refinancing, having taken on a replacement facility, in this case $110 million US, via a combination of the Clean Energy Finance Corporation and BNP Paribas. And the terms are amazing. And to give you some idea of how stark the contrast is, we've moved from, well, amortisation of the original Nordic facility happening now to amortisation pushed out until September 2022. And a comparable interest rate, 12% under the Nordic bond, 5%, nominally 5% under the new facility. So it's like chalk and cheese, and a material step up for Pilbara Minerals, fundamentally driven by the right criteria you'd expect every bank to be looking at. Does the plant work? Is it the right cost base? Are you working with the right partners? And the great news is that Pilbara Minerals ticks all those boxes. The other thing that's been spooking, I'm sure, people interested observers in the battery raw materials world, is to say, well, we're all excited about lithium and we're motivated and we can see this world of EVs coming, and yet the price is cratering. And the answer is actually, in the scheme of things, it was pretty simple. It's all about China, as it is in most of resources, but especially true in the lithium and the battery raw materials world, because they dominate by a long way. They dominate consumption, and their consumption backed off as they changed the subsidy regime that inspired the first round of growth. So clearly that's a really material impact to the market, and we felt that here in WA. However, to give you some idea how quickly the world changes, as a result of the Green New Deal that's been rolled out through Europe, today Europe is a bigger EV market than China. Within the space of 12 months, the world has literally flipped on its head, By the way, China's coming back, but nonetheless Europe has overtaken them by not some small margin. And if you're a car manufacturer, or even for the relatively few that are there, a cell manufacturer in Europe, you have no choice today but to go to China for your raw materials. That's because there is no raw materials or very limited raw materials supply chain into Europe. So the Europeans are now crawling all over the China supply chain, and that is fantastic news, perversely. It's fantastic news for WA, because China relies predominantly on West Australian spodumene supply. And that's why, in the end, we should all be excited about these changes in the market. And the evidence, as I said, is pretty clear. Sales in Europe have absolutely taken off. So this graph looks at basically year-on-year EV sales, and then the last bar is the first half of 2020. So it's not even a full year, and it's already going vertical. So the change in Europe has been very, very substantial. And with the subsidy support that exists in Europe today, you can buy either, your choice as a consumer, facing you in the showroom is the e-Golf versus the petrol Golf. And today, there is no difference, largely no difference between the price of the two. So that's one of the reasons why sales have now fundamentally taken off. And as I said, that's good news, ultimately for Western Australia, because they're relying on the China supply chain. One last thing I'd like to reflect on in this world is the effect of spodumene, the link to the specialty lithium chemical, or lithium salt sometimes referred to, lithium hydroxide, as a key contributor to high nickel cathode materials and very high-end energy-dense batteries. That was the theme that supported a lot of the investment that went in WA, like Pilgangora, like our project, that went into Western Australia. But unfortunately, it didn't come as quickly as we expected, as I said, fundamentally driven by that demand weakness in China. But the good news is that thread is now alive and well, and linked to the EV story in Europe, because the EVs built for the Western world all universally contain high nickel cathode materials, strengthening the link to lithium hydroxide, in turn playing to the competitive advantage of spodumene in WA, and especially if you're low cost and high grade. So I feel that it is absolutely the case that Pilbara Minerals is invested in the right place, the right project, and we're going to be able to take advantage of this next wave of growth that's coming. Moving on, sustainability has become, of course, an area of intense focus, no matter what commodity you're in, but I can assure you equally true for the lithium raw materials world. And I've got to say that some of the attention, I think, is either people are making calls too early and saying that the carbon footprint of the lithium raw materials industry, and especially the hard rock supply chain, is going to grow or going to affect the carbon intensity of the supply chain. But I think the call is too early, because there's still a lot more innovation that's going to come to the table as it relates to the carbon footprint of all our operations. And Pilbara Minerals has some important work happening in the background that's going to assist in the delivery of a lower carbon footprint model. So we're confident, and again, another one of the paths that's going to support, like a foundation element, if you like, to our business, and we're very, very pleased to be working in that area. A great project and a great team attracts great partners, and I'm going to drill into a couple of these partners, and I hope leave you with the impression that they're all participating in our business, albeit in different areas, but for the same reason, because it's a quality business underpinned by an amazing project. The most recent of them is BNP Paribas and the Clean Energy Finance Corporation, esteemed financial institutions, and they've chosen Pilbara Minerals as a key bet. Don't kid yourselves, in a difficult market, to back Pilbara Minerals and basically fund or sustain our operations in the period of time that this weakness is still in place, but fundamentally banking the recovery. And given the participation of both BNP Paribas and CFC and their reading of the tickers around the world as to what's happening in the green economy, they are clearly backing both the right horse but also the right subsector of the natural resources world. They must also have a bit of faith in the team at Pilbara Minerals, so we very much thank them for that. CATL is the big dog in China as far as lithium-ion batteries are concerned. In fact, they sort of interchangeably number one around the world for batteries deployed in EVs. We've got to know CATL over many years, actually having first met them back in 2017, and they're now our largest shareholder. And again, the logic is the same. You think about it from their point of view, they're building their business in growth terms exponentially. It's incredible the pace they're building out cell-making capacity. And they've got their fingers all around the globe, key relationships with Daimler-Benz, Honda, BMW, you name it, the list goes on, already providing cells to those companies and expanding at an incredible pace. So it makes sense that you would look for participation upstream. And you'd be looking for the key projects that are going to supply the sort of critical mass that ultimately underpins a business like theirs. So, another great partner. They've led into relationships with one of their affiliates, Yibin Tianyi. Yibin Tianyi is a key chemical converter in China, fundamentally supplying that massive CATL supply chain. We have some offtake with them. And to give you some idea as to how quickly they're growing, they've commissioned their first 25,000 lithium carbonate equivalent tonnes in June, July this year. They're already building stage 2, that'll take them to 50, and it'll be commissioned from June next year. And the next 50 will be completed for a total of 100,000 lithium carbonate equivalent tonnes by 2023. The speed with which they are building out their supply chain, in this case, principally in China, but in the case of CATL, also battery facilities in Germany. They're doing it at a phenomenal pace. And as a result, they have to have their eye on the ball as far as raw materials are concerned. POSCO is an important relationship, shareholder, off-taker today as we ship tonnes into South Korea. Great Wall Motor Company, who've built their own battery company, S-Volt. And by the way, when they build a battery company, this is equally true of Great Wall and CATL, they're not just thinking about EVs. In fact, they would say the market will ultimately be bigger for batteries in energy storage at a micro scale and at a macro scale. So their intent, if you like, with their business is very, very strategic. It starts with EVs, build up critical mass in volumetric capacity, lower the cost of the batteries, and the batteries make their way readily into energy storage. And lastly, Ganfeng and General Lithium, two of the old guards in the chemical conversion industry in China, both very much at the high quality end, qualified for Japan and Korea, where the threshold around quality is materially higher. And of course, they're using our spodumene. And I think that says a lot about both the quality of the product that we deliver, but also the capacity to continue to expand and the lifetime in the asset, which is why these guys all get involved in our business. So very, very pleased to have these partners participating. And as I said, from the outset, there's a reason why they get involved. We are genuinely one of the world's premier lithium raw materials projects. Okay, so closing out. We have an amazing platform in the development of our stage 1 facilities. The utilisation of those facilities continues to improve. The expectation is that demand conditions have already started to improve, and eventually pricing will follow. We've still got a bit more work to do on the plant. There is, in the scheme of things, relatively minor improvements that will continue to improve its performance. but fundamentally it's operating very well and delivering a very low cost outcome. We are obviously, with such a large project, we have the opportunity to keep growing. We can expand almost threefold the capacity at the mine. But we're not going to do it, of course, until the market is ready for it. And on the face of it, it looks like those opportunities are starting to emerge. But we're not about to hit the button on expansion capacity, at least until all of the capacity in stage one is consumed. We have ultimately the objective of diversifying our participation in the lithium raw materials supply chain, and there's a couple of ways that we can do that. We already have positions where we're set to invest in chemical facilities, and the main thread there is the relationship with POSCO, where we're sending spodumene raw materials into South Korea. It's been chemically converted and then delivered to the world. That's already happening, but at a small scale through their demonstration plant. We have the opportunity to co-invest with POSCO in those facilities, subject to more work to be done in their facilities, but hopefully not too far away. And lastly, the other pillar that we're actively working on is ensuring that we have a sustainable footprint in the industry. And as I alluded to earlier, the industry, of course, is intensely focused in this area, and we think we have some really interesting tools that can be deployed that will ultimately help lower the carbon footprint of the industry. And our team is really, really keen to be a part of that. I alluded to the team being forged in the fire. It is a fantastic team. I'm very proud to work with the people at Pilbara Minerals. They've done an amazing job dealing with all the circumstances that have arisen in our business. But now we're set to enjoy the fruits of our labour. And with that thought, I'll leave it to questions. Thank you, Aaron.
Thank you, Ken. Any questions out there? Well, I have a question here that's come in through the SMS. During the second quarter update, it was mentioned that POSCO were presenting to their board in quarter three. As of today, the POSCO JV is potentially for 2021. Is there a problem, and when do you see them finally committing?
Well, there's no problem other than they're working at POSCO speed. Perhaps that's the best way to describe it. So what we understand of POSCO's objectives is they are very, very intensely focused on investments in the battery raw material sphere, and it's happening in every regard through their business. Cathode materials, cobalt sulfate, nickel sulfate, and our expectation is lithium hydroxide down the track. But they've also told us that they want to continue to keep working on the demonstration plant. So we're really waiting to hear back from them for their commitment in the project. As to the relationship with Pilbara Minerals, our relationship with POSCO, very, very positive.
Thanks, Ken. If there's no other questions, we'll thank Ken and well done.
Thanks, mate.